moment of pride for Metals Focus because yet again, this year, they've managed to bring out to you the most awaited silver survey. As I begin inviting our very special guests for this, you're all aware that the World Silver Survey comes out sometime in mid-April, and this project is commissioned by the Silver Institute for the industry every year. This year, I would invite Mr. Harshal Barot to present the copies of the World Silver Surveys to the distinguished dignitaries on the stage. So inviting Mr. Harshal Barot. Inviting to help him in the unveiling of the World Silver Survey, I would like to invite Mr. Monal Thakkar is not here. Mr. Chirag Thakkar is here. May I invite your presence on the stage, sir? Mr. Surendra Mehta, sir, please manch par aa jaएं for this moment. Mr. Samit Guha, Mr. Phil Baker, Mr. Michael Di Rienzo, Mr. Mohammad Ayub, Mr. Leeladhar Patidar, and Mr. Gautam Choksi. Your handbook for the upcoming year for silver. Ladies and gentlemen, your one resource that you must have with you. Thank you, gentlemen. I invite you to take your copies with you to your seats. Ladies and gentlemen, Mr. Harshal Barot is the senior consultant with over 15 years experience as a precious metals analyst, responsible for Metal Focus's research on India, Australia, and parts of Middle East. It's time he explains this survey to us in a deeper detail.
Thank you all for being here. And as I present this year's silver survey to you, I would first of all like to thank the Silver Institute again for commissioning Metals Focus for yet another year to bring out this report. And, a lot of hard work has gone into this report, and it is going to be, a challenge to summarize all of that in a short span of time. So I would urge you all to read the report. And what I will try to do over the next 15-20 minutes is, give you some of the key takeaways from the report, which will probably help shape discussions in this conference also as we go ahead. We would also like to thank the sponsors of this report, for always supporting the release of this report as well. And last but not the least, I would also like to thank our contacts from the industry, some of who are sitting here already, who have always been supportive as we go about doing our research on the industry. So coming to 2025 first, I think it was an exceptional year as far as the silver prices were concerned. We saw intra-year gain of 125% in the silver price. If you talk about the average prices, they were up. Even average price was 40, so we had more than a 40-50% gain even in the average price as far as silver is concerned. So definitely an exceptional year, but whenever we talk about this year, there was always this discussion in the market about silver being in a deficit. 2025 was the 5th year that the silver market saw a deficit. This basically means that demand was outstripping supply for yet another year. And cumulatively, what this has done is that this has resulted in a stock drawdown of more than 750 million ounces from the silver market. And what we saw in October was somewhere a culmination of all these deficits in the market. And as I said, talking about 2025 is incomplete if we don't talk about what happened in October of 2025. Basically, a confluence of a lot of factors that led to a parabolic rally starting in silver, which lasted as long as until January this year. And one of the key drivers of this rally was, of course, the silver market deficit, which led to issues about supply because there was strong demand at that point in time, not just from ETFs across the world, but Indian demand was also exceptionally strong. Something that Mr. Chirag also pointed out earlier, that October was a time when Indians were importing at a record pace. Premiums in the market were at record levels, something that we have not seen in recent times. It was a season of Diwali, festivals, and weddings in India. And at the same time, we had these stories about China stopping exports of silver coming onto the market. Although a lot of that was misinformation, and China continues to export silver even this year. In fact, the number of companies that have got licenses to export silver this year is higher than it was the previous year. So that was no longer the case, but a combination of deficits in the market, strong ETF demand, strong physical demand, all led to lease rates at one point topping 200%, and premiums across the markets that we were traveling at that point, not just in India, in Middle East, Australia, and all the markets that we cover, we saw very strong premiums in the market at that point in time. Talking about overall demand supply that we saw in 2025, so what we saw is global supply hitting a multi-decade high in 2025. Recycling also increased, but not as much as we saw the increase in the price. There were a couple of factors behind this. One is that although a lot of refineries, especially in Europe and North America, were receiving recycled material, but they were simply not able to keep up with the pace of material that was coming into them. So there was a lot of lead times in recycling as well. In fact, there were certain weeks in the year when certain refineries had stopped accepting certain grades of silver scrap at all. Scrap supply was constrained because of these reasons. But overall, what we've seen is in a lot of markets, because the price expectations were so bullish that consumers were simply not willing to part with their silver. Yes, in certain Western countries, we saw some legacy silverware stocks coming out. But in some of the key markets, such as India, we saw very limited response of recycling. In terms of demand, overall silver demand was down for a third consecutive year. Given the price sensitivity of certain segments such as jewelry and silver articles, we saw that segment suffering the most in terms of demand. Investment demand was definitely stronger across the world. ETFs were again a big driver here. Industrial demand, however, was down 2%. Just to give you a backdrop, since COVID, industrial demand has been hitting a series of records highs. And we saw a first decline since 2021 in silver industrial demand. And much of this was also down to the weakness in photovoltaics, something that I'll cover in the slides going forward. But that was one area which was impacting silver industrial demand the most. And as I said, the divergence was not just between the different categories of silver demand, it was also between markets. So for example, China, we saw demand reaching a record high last year, but at the same time, Indian demand was down, despite the fact that we had very strong investment demand. But outside of ETPs, we saw the other sectors, basically jewelry and silverware, which is big categories in India, they definitely saw a decline because consumers were cutting back purchases. The industry was adjusting weights to match with the price, and in general, there was a cut down just because of the price in these categories. As I said, the coin and bar demand recovered last year. If you see across the globe, most of the markets did well, apart from the US, which is the only market which saw demand decline last year to the lowest since 2008. So at a time when globally a lot of investors were still buying silver, in the US market, investors were still selling. And in fact, we saw a lot of new markets that became interested in silver. For example, Middle East, I traveled to Saudi, Qatar, Egypt, all those markets where traditionally silver was not as big as an investment. But starting October last year, we saw consumers becoming very interested in silver purely because of the fact that they felt that silver still has outperformance scope against that of gold, and it was still relatively affordable for them to invest in silver when gold prices was these high. So these are certainly some positives that emerged as far as investment is concerned. Talking of investment, again, India being one of the big markets, if you look back at history and you know how Indian investors have behaved to the price rally, this time what we saw was that investor was chasing the price higher, but we've seen an instance before in 2020 when investors were actually selling silver when the price was going high. So if you look at the backdrop, 2010 to 2013, when the silver price was doing exceptionally well, a lot of Indian investors had bought silver aggressively. But then over the next 5 to 7 years, silver price simply did not perform. They went sideways. So when eventually in 2020, when they achieved their levels of 2013, the first instinct among a lot of investors was to sell silver. And we saw net disinvestment also happening, in certain quarters during 2020. But since then, we've seen the launch of ETPs also in India, and post-COVID, the wave that we've seen of investment in precious metals, that has definitely helped. And even when the price was rallying so hard in October, September, and even in January this year, Indian investors were buying aggressively. Now that the price has again turned sideways, we've seen that investors have now gone on the sidelines. But that was one change in behavior that we definitely saw. In terms of ETPs, as it's been discussed before as well, these were also one of the big drivers of the silver price last year. India seeing inflows of roughly around 2,000 tons in ETP products. Remember that 2022 is when ETPs started in India, and in the last 3 years, the kind of growth that these products have seen is simply impressive. Also goes to show that there is a new segment of investors that is coming into the silver market who are typically only investing in financial markets earlier, but now with availability of ETFs, they see it easier to diversify their portfolios into precious metals. So we've seen strong flows, not just in silver, but gold ETFs also in India. So this is definitely a positive. And from what we believe, these investors are relatively sticky. They're investing amounts every month. So they are not just looking at short-term trading opportunities, but they are looking at silver as a diversifier against broader global market uncertainties. Coming to the industrial side of the market, I'm sure this is something that a lot of people will have an interest in here, is that although silver's demand was down, industrial demand was down just 2% last year, but photovoltaics, which is the backbone of silver industrial demand, was down 6% last year. And in the next couple of slides, you will see how this market is changing. So if you see in this chart, 2025 is when global installations were still going higher, achieving new records. But if you look at the next chart, the actual silver loadings have been falling consistently. So if you look at some of the key technologies, in these charts, the average loadings, in some of them, if you compare to 2021, are down even 60-70%. So the absolute price of silver is one of the main reasons that the silver usage is being cut down in a lot of these technologies as well. So definitely this is an area where thrifting is still likely to continue, given the cost of silver in the overall material, overall product is going higher. So that is definitely going to be a risk. And if you look at TopCon, which is the key technology and the largest right now, if you see the thrifting in that, it's around 50% from 2021 levels. So silver's usage in this category alone is down massively. But at the same time, what we are seeing is that even though PV demand is facing challenges, but there are other areas of silver demand which are seeing supporting the industrial demand, and some of these sectors where silver is absolutely critical, and we've not seen any evidence of thrifting or substitution in these technologies. So automotive BEVs, data centers, all related to AI, power grid and nuclear energy. Now again, this is a very key area to look for going forward, because the uncertainties that we've seen regarding fossil fuels and supplies to the Middle East, more and more countries are trying to diversify away and build nuclear plant capabilities for energy generation. So this is definitely something that we are watching as well. Aerospace, again here, reliability and the thermal properties of silver are very important. So here we've not seen any kind of thrifting happening. And in terms of the outlook for all these sectors as well, we are still very positive. If you look at battery electrical vehicle production, still growing globally, so this is going to support silver going ahead. The number of data centers globally continues to grow. The number of satellites launched, if you look at even the biomedicine, that industry is expected to grow at 12 to 16% CAGR over the next 5 years. So even though there is challenge on the PV side, but we believe that it will be almost offset by all these sectors. So we believe that industrial demand, although will be lower next year as well, but not massively as such. Coming to the supply side now, supply side was the overall global supply was higher last year. We saw growth in Russia and Peru majorly, but China and Morocco also helped. But even on the supply side, there are some interesting dynamics to watch, as you'll see in this chart, that output from primary silver mines continues to go lower. So majority of silver still is coming as a byproduct from lead zinc mines, from copper mines, from gold mines. If you look at primary silver production as a ratio, if you see, it's around 22-23% last year. So it's back to the lowest since 2020. This was due to a couple of reasons. One is that there were some mine closures in Mexico as well as Indonesia, which weighed on primary supply. But there were some new additions in the byproduct side, which helped supply grow. And with the silver price where it is no surprise that mining companies are doing very well. If you look at the all-in sustaining cost of silver, it's still around $12 an ounce. And given the average price of $40 last year, that basically means a $28 per ounce margin for silver mining companies, so which is again helping. And in terms of finally the outlook for demand supply in 2026, overall, some of the themes are very similar to what we saw last year. The price-sensitive categories of jewelry and silverware will continue to suffer because of the price, but investment is something that we see will support the market. Effectively, we are looking at yet another year of deficits in silver, which will be a 6th year of deficit. And remember, what happened in October, so there is still scope of a liquidity squeeze coming into silver purely because of the deficits. So, there's no surprise in guessing what our price outlook will be, because we see yet another year of deficits for the price. With that, I would like to thank you all again for being so patient, and I hope you take away something from this short presentation that I had. Thank you very much, everyone.